there is sharp concerns around the cost of debt and how much money the Fed has to pay. The Fed has been paying a lot of money to the U.S. Treasury Department, but then the Treasury Department is going to have to be paying the bondholders. And this is going to create stress on the national budget. How much stress? Well, we're going to find out. And I think this is one of the reasons why some very forward-thinking people have been loading up on gold over the last couple of months, particularly central banks. Gold is now at 1822. Why are countries buying up gold? Well, they're worried about dollar reserves. They're worried about the performance of their currency against the U.S. dollar. And if the United States were to ever engage in a structured or soft default, similar to what we saw with the Bank of England this year, gold prices are going to 3,000. Full stop. So I do own gold. It's about 8% of my total portfolio. I do not, I guess I can throw it at somebody. I do believe in guns and green beans more than gold, but we are starting to see gold and the metals get off the ground. This is a longer term inflation play. So long as we do not have an actual hard default type of environment, gold is going to obviously do rather well. Now, I want to point something out about gold because this is a very misunderstood concept. So back in 2008, we had a massive financial crisis. It was a liquidity crisis. Gold prices plunged. Why? There were no bidders. Nobody wanted to own it. Gold rallied in 2011 because of concerns around the United States debt ceiling when the U.S. debt was somewhere around like 14 trillion. Amateurs. Well, at that point, that is where gold really, really rallied. So if you start to hear concerns around default, if you start to hear concerns around what the United States government's going to do, you start hearing more things about the U.S. government printing more money, which again is more debt in the system, because that is really all that money is. Our money is debt instruments. It says it on the currency itself. It says this is a debt. This settles all debts. This note is for the purposes of debts. All of that money that the government, all that money that is in the government debt is actually held largely by U.S. citizens. The problem is that when you create more of it, even though the U.S. government should not be able to default because we have a printing press, it creates new inflation. That's the problem moving forward. How is this government going to continue to create inflation? The U.S. government just added another $1.7 trillion to the bottom line in this government. We're at around $32 trillion now. I think we'll be at 40 by 2026. And the circle of life goes round and round. Gold continuing to move higher. Silver's getting another bid. I love silver anywhere down around $22, and I'm resetting my expectations on gold once again. If it gets back down to $17.50, that is where I am buying for the long term.